Hi, everyone. Thank you for joining us for Grow Faster with Accelerated Card Issuance webinar. My name is Maria, and I'll be moderating today's session. We are extremely happy to host it with our good friends from NeuroID. So it is a great opportunity for you guys to turbocharge your card issuance, adopting two complementary solutions. Before we get started, here are some housekeeping notes. So all participants are in listen-only mode. Today's webinar will include both a presentation and a Q&A session. Please enter questions via chat as you think of them throughout the session, and we'll address as many as possible at the end. Lastly, today's presentation will be recorded. We'll send a follow-up email to everyone with a link to the recording. Before we dive in, I would like to welcome Ilan and James, who will be presenting today. Ilan has over 20 years of experience operating in banking and payment space. He has worked in banking sector as well as credit union space. He has passion for launching new products that address real world needs. A fun fact about Ilan is that he attends Comic-Con every year. Oh my God, Ilan, I didn't know that you like comics. I should go with you next year. It's in July, right?
It is.
Nice. James has over 10 years of experience in establishing best practices for multi-channel onboarding across the financial services space. He has been at NeuroID for over 4 years and currently serves as the Director of Behavioral Analytics, where his primary focus is to oversee NeuroID's ability to provide value to its customers through their full suite of behavioral solutions. A fun fact about James is he spends most of his free time fly fishing, and I strongly believe that stress is caused by not fishing enough. So James, kudos to you. Without further ado, let's get started. I guess, Ilan, over to you.
Perfect. Today we'd like to talk to you about the ways you can protect and accelerate onboarding members, onboarding new programs for your credit card programs or debit card programs. Today I'd like to talk to you about VGS, otherwise known as Very Good Security, and how we operate with NeuroID to both make it secure and user-friendly. And with that, Maria, let's kick it off.
Great, and first I would like to thank VGS for inviting me to talk on this webinar. And before I jumped into how it works, I just wanted to spend a couple minutes talking to who NeuroID is and setting the table for some of the topics that I'll cover with Ilan as we move through the presentation. So just really quickly, NeuroID is a leading behavioral analytics company that focuses primarily on digital account opening and origination experiences globally. And here in the US, we're working with the largest banks, insurance carriers, payments providers, and fintech leaders, looking at lines of business like buy now, pay later, unsecured loans, credit card, and deposits. And really through our behavioral insights, we're able to identify whether applicants are familiar or unfamiliar with their personal information and enable financial institutions to act on that behavioral insight. And if you think about your long-term and short-term memory, if I asked you what your address is, your name, your email, or your phone, you'd likely have that on instant recall and be able to tell it to me very quickly. And that's essentially the types of signals that we're able to pull out digitally as applicants move throughout your application. And from a partnership perspective, one of the things that we were looking for as we partnered with VGS was a leading provider in the financial services space that had synergy around reducing risk exposure to financial institutions. And one of the primary constraints that we run into typically is internal resources. And we know that maximizing the value for the financial institution to get the most out of a single JavaScript integration through VGS is extremely important. And so we saw a lot of synergy within the partnership and wanted to continue down that journey with VGS, and led to us talking through our capabilities together on the webinar. So if you want to move to the how it works slide, I'm going to hit on a high level really how the technologies work together. So once you get the lightweight JavaScript installed, that really enables both VGS and NeuroID capabilities. And there's really three phases to how it works: data collection, storage and translation, and real-time access. So as you look at the bottom of the slide, I'll go into a little bit more detail on those phases within these steps. So if you think about the data collection piece, looking at steps 1A and B, as soon as the application is initialized, that JavaScript from a NeuroID perspective starts collecting high fidelity behavioral metrics without collecting or storing PII, personally identifiable information. In parallel, VGS also starts securely collecting that sensitive data so that it never touches your systems. They anonymize it through VGS Protect and vault it in their secure environment so that it helps mitigate that risk exposure that I mentioned earlier. While VGS is doing that and the applicant moves through the application process, NeuroID begins to translate what we like to call digital body language. And that really begins to allow us to measure the familiarity that I mentioned earlier, as well as the efficiency by which an applicant is moving through that session. And when we think about how customers can then start to use this data in real time, NeuroID monitors crowd level behavior for near real-time alerting, as well as providing session level data back real time via API to enable real-time decisioning. Additionally, through VGS Exchange, you're able to leverage the alias data that VGS has for those sensitive fields, and they can inject that or reinsert it into any outbound requests to pull third-party data. So as you think about actioning real time, this is where VGS will provide that data to outbound requests to pull out additional third-party compliance, fraud, or credit risk data to help inform your real-time decisioning. So at the highest level, that's really where we focus on, where you're able to not have to worry about NeuroID collecting or storing sensitive information like PII, as well as reducing that risk exposure by allowing VGS to store it and make that data available via alias. So with that, I'll hand it back over to you, Alon.
Fantastic. Thank you, James. And feel free to ask questions as we go through this. I would just like to augment what James said. It is true that VGS, we can store the data and we allow for seamless transition and sharing of data. And that could be something like PII. For those of you who are unfamiliar with the term, PII is personally identifiable information. We're talking about government IDs, social security numbers, in some cases, cell phone or email address. Any data that the issuer, the card program has deemed to be sensitive, we can hold and exchange in real time. There are instances where, say, there's a system called check systems. That's a vendor. If they want to know if this person has mishandled a checking account in the past, we could pass it off to check systems. If it is something, a use case where they would like to understand the credit score, we could pass it off to one of the 3 larger credit bureaus or another third party that can score it. And when that credit score comes back, we now reassociate the credit score, not with the real social security number or not with the real government ID. We associate it with a tokenized version inside your environment. So now you have all the benefits of knowing the KYC information, the credit bureau information, without the risk or the burden of housing the truly sensitive information. So the PII sits with us and the use cases sit with you. And it makes it easy for you to operate. And again, we use a proxy layer approach. There's not a lot of heavy lifting in terms of coding. We really sit as a membrane that sits outside your network, very, very light touch, and everything happens in real time. And that's it for me on this one, Marie. And when we talk about enriching the value of sensitive data, I think this is something that's really, I think I'm quite interested in. When we think about the enrichment of data, I think I want to make sure it's clear. What we do at VGS, we don't allow you just simply to store the data. We allow you to do is to enrich it. And what do I mean by enrich it? As I said before, we think about credit bureau information. You can now have credit bureau information going back over time. If it's for credit cards, they revolve credit. They pay off their credit card in real time. You have information that you can enrich it with, such as what is their behavior for most recent financial transactions? You can look at KYC information. You can also look at, say, address information. Are they moving around a lot? Things that help you determine, is this the real person? How risky is this person's behavior? How long have they been around? And that's what we allow you to do with a synthetic version of the consumer's information that you can play and manipulate with. And if that file is transferred around internally within your system, there's no risk of exposing real PII. There's no real driver's license or social security number. You can perform your analytics on a vast array of metrics that you'd like to look at without the risk of, if the file, say, got sent out accidentally, of that being information that's of value to anyone outside your organization. James, would you like to add more?
Yeah, and when we really think about enriching the existing data that a lot of financial institutions are leveraging, one of the important considerations is really the digital footprint of the applicants by which we're looking at coming through the onboarding experiences. And when you think about the digital footprint, it really highlights the key problems that exist with some of the existing traditional data that's being leveraged to make risk decisions. And so as we think about enriching that data set, it's important that we try to create, or financial institutions try to create, a holistic view of that digital applicant. And it's important to consider, again, those shortfalls of traditional data sources. If you think about age of data, where maybe you haven't seen this applicant for a year or 2 years in the data set, or consortium constraints where you've never seen this consumer before. And on top of that, credit bureaus have really essentially become the de facto standard for establishing a digital identity and that digital footprint that a lot of institutions are trying to pull data from. And the majority of fraud and risk providers that really are in the space today use that as a foundational layer of data to provide their signals and resell their services. Unfortunately, if someone is not active in banking, it really severely limits their digital footprint. And that ultimately degrades your ability to make the right decision for that customer. And so as we look at being able to enrich data, leveraging a multi-layered strategy is vital to ensuring that financial institutions are able to take full advantage of every single applicant that touches your onboarding journey, especially your digital onboarding journey. And that's really where we begin to enrich the data that exists today with a lot of our customers.
All righty. Let's talk about some of the things that are fun that we do here at VGS. Using the VGS infrastructure, if you are, say, a fintech, you're going to become a net new card issuer, we can help you go to market quicker. And what I mean by that is, if you are a fintech, you probably have a sponsor bank, you're some form of a program manager. What we can do is help you reach PCI compliance more quickly by leveraging our platform. And if you need SOC 2 compliance, that works for us also. These are two areas in which we can be your support, your infrastructure, your backbone, if you will, to help you become compliant quickly. I know for lots of fintechs, for example, the first thing they think of when they've raised their A round is not compliance. However, when you work in the financial services space, compliance is anywhere and everywhere. And think of us in certain ways as your compliance as a service vendor. Again, getting you to PCI level 1 compliance quickly, also your backbone for SOC 2 compliance. Secondly, what's really, I think, one of the reasons why I joined VGS is I like to work with startups. I like to work with innovative banks and credit unions. And one of the constraints they have is just strictly financial. They have budgetary constraints. What we do at VGS, we lower the cost of your security. We lower the cost of you having to do business. Think about this simply. If you're storing a lot of the sensitive information, social security numbers, or even card numbers, there's a cost to having all that data. There's a cost to having resolving a data breach. And there's really, on our model, a low-cost way of delivering these services to you. Again, you're going to have low cost and extremely high security. And by leveraging our platform, you can bring many use cases to life that you wouldn't be able to do if you were just doing it on your own.
Great. And, as you look at the tiles for NeuroID on this slide, one of the first steps in thinking about to unlocking and interpreting that behavioral data is really, we look at how we can enable customers to leverage this behavior operationally. And as we unlock this data for customers, we were very intentional in setting up our behavioral solutions to really meet customers where they're at. And on this call, I know there's likely 3 stages where attendees are. Likely to have not heard of behavior being used in account opening, have heard about behavior being used in account opening, and it's on the roadmap to adopt, say this year or next year, or you already are leveraging behavior in some degree within your business strategy, and you're really looking to expand that use. And really through this single JavaScript, we unlock this new source of data for customers to be able to leverage it in a few different ways. And really, as you think about it from the monitoring crowd behavior perspective, this is where a lot of FIs who are in those first 2 categories are going to be able to begin leveraging behavior operationally and getting value out of it. So what we're able to do is provide crowd level monitoring and near real-time alerting that doesn't require any API to be built out. So you can just leverage this single JavaScript installation and you're ready to go. And that significantly reduces the technical lift to begin operationalizing behavior. As I mentioned earlier, I would imagine for everybody that is on this call or listens to this call, it's going to take having resources prioritized is a huge obstacle to overcome. And so being able to just leverage this JavaScript, begin using our data operationally, will really reduce that technical lift on your side. So we'll monitor the distribution of applicants as they flow through your digital application and the familiarity that they have with the PII, so that we can alert you to any meaningful changes in behavior, especially as you think about unfamiliarity. And that can be indicative in a lot of cases of a fraud ring attack or an increase in fraud velocity. So in the event that a crowd alert is triggered, you will be alerted and provided with all of the applications associated with that fraud event. And customers have used these insights to really help navigate high velocity fraud attacks efficiently. And really this behavior starts to help lay the groundwork for where you can start leveraging this behavioral insight real time and stop fraud before it starts. And so this is really one of the first areas where customers start to begin looking at leveraging behavior through that single JavaScript integration. With that, I'll hand it back to you, Alon.
Perfect. And here's why I get very passionate about retaining the value of the data without taking on the risk. I'll outline a simple use case that comes from the payment world. I've spent my career pretty much always working on different payment initiatives. And here's something that's a common way that banks, credit unions, fintechs will use payment data. They will look to see what the spend data is indicating about their end customer. For example, where I was working, we would look to see the frequency of visits to big box retailers such as Home Depot or Lowe's. If they were frequenting Home Depot or Lowe's, we have a hypothesis that they are homeowners. Homeowners tend to frequent Lowe's or Home Depot more frequently than, say, someone who's renting. And now we have an opportunity to cross-sell or upsell other banking products. Do they need a new mortgage, a home equity line of credit? Sometimes you think that homeowners, they may be starting a family. You may want to message out, do you want a 529 plan for your baby, whatever have you. So now you have the ability now with our data combined with the data you have from your ID to have a rich data set that you can analyze now without the risk of, as you study this data, as you maybe work with outside vendors, of the data being compromised. You have anonymized data as opposed to true data, real data, and now you can engage in lots of different types of analysis, and now you can work with third parties because you're not afraid of sharing the data in a non-anonymized state. So I think that's something when I think about data. I love spending data because people can tell you what they do, but when you look at their data, you look at their spend data, you know exactly what they do. There's no pretending. And this allows you to really start to diagnose, allow you to segment, and you may have segments and behavior in your data that you don't know exists. And if you feel that data is very risky, you're probably less likely to play with it. And then on the other side, this also allows you to close more deals. How so? Because now you have other vendors that you can work with that know that you have a strong security posture. They feel more comfortable free-flowing data between the two parties, between you and, say, another party. You might be one fintech or another financial services supplier, and now you can work with each other because you know you're both working in a secure and sound environment. And then strictly from a security standpoint, from a marketing standpoint, every consumer out there wants to know when you're dealing with their financial data that you're taking security very, very seriously. And working with very good security, you can message it as you want, but you can always let your end members know, your end consumers know that you've taken a very strong security posture, and you will continue to do so.
Yeah, and Alon, as we look at how NeuroID plays off of those two key value props from very good security, one of the areas that we focus on after you get through crowd level monitoring is really also helping to reduce that risk exposure and preventing identity theft and fraud. So next, we have customers who are ready to start leveraging behavior in real time. You're ready to move from near real-time alerting and crowd level monitoring and leverage this in your real-time decisions. So what we typically try to focus on is time to value. So we can work with our customers to use our signals top of funnel as you think about your onboarding decisioning flow, as we're looking at pre-submit digital behavior. And we can get integrated into processes like KYC and KYB, where the first decision around identity is being made within a financial institution. And really you want to look at it as, does the identity exist? Going back to that digital footprint that I referenced earlier. And then what we're bringing to the table is saying, are they familiar with it? What is the next best course of action that we can do for this applicant to ensure that we're retaining that risk profile while also giving genuine applicants a good customer experience? Because if customers are more interested in leveraging us for fraud, we can do that as well. So we can look at KYC, KYB. If, say, that's not necessarily an area where you want to integrate behavior, we can look further down into the fraud stack as well. And we can plug in there to help segment out based on familiarity via a single rule, or attributes to help influence rules, scorecards, and models within that onboarding decisioning flow. And again, all of this data that we're collecting in session is being made available to your team in real time via API. And lastly, as you think about closing more deals, this is really where NeuroID highlights genuine customers. So when you think about taking advantage of every application that I mentioned earlier, we want to start focusing on those who are familiar with their identity. Instead of saying, let's focus on those that are potentially a higher risk applicant, where are those genuine applicants that might have a smaller digital footprint, but are showing high familiarity with their digital identity? And we can identify a risk-right experience by informing verification. And the way that we've worked with a lot of financial institutions is that you can have the best designed application, have the best UI, but if you flag a genuine applicant to have to provide a W-2 or an SSN card and put them through extremely onerous verification unnecessarily, the likelihood that you're going to lose that customer is extremely high. And we see it with a lot of our customers. So being able to, in real time, inform your existing verification strategies based on familiarity and intent is providing our customers an ability to flag risk, but more importantly, take advantage of every applicant that is coming through, even those with smaller digital footprints, to ensure that you're giving every digital applicant an opportunity to convert into a good loan or credit card or credit product. And so that's really where we focus on the partnership with VGS and the synergies that we see in the values that we can derive and deliver to our customers.
Thank you, James. Do we have any questions from the audience? Anyone have anything for us?
Yes, I see some questions coming in, so let's get them one by one, guys. The first question is, how does it work for running KYC AML with providers like LexisNexis, Experian, etc.? I guess, Ilan, will you be able to take this one?
Perfect. Working with third-party providers like LexisNexis, the credit bureaus, it's a very simple proxy approach. You would whitelist our IPs. You would provide your same connectivity that you'd have today, login, password, replacing our IP. You'd whitelist our IP so that to the end bureau, to the end KYC vendor, it looks like it's coming from you. You enter in your information, you identify the fields that you'd like to protect, and you're off to the races. We're not talking about API encoding. We're talking more about form filling than anything else.
Nice, thank you.
And I might also add, as we look at some of those processes that I mentioned, and with some of those providers that are doing that KYC, we can also help inform some of those strategies to where, again, you're looking at, does this identity exist and are they familiar with it? So really helping to inform those types of step-up verifications that might exist within existing onboarding flows.
Perfect. Thank you very much, James. And I'm going to leave this slide on the screen, like during our Q&A. I'd like to encourage people who are attending, please submit your questions. We still have time for Q&A. But I have one more question from the audience right now. Do behavioral analytics measure intent against a crowd versus individual?
Yeah, no, that's a great question. And so as we look at how we collect behavior, we have several patents around our data collection techniques where we're actually able to, in session, baseline the behavior of that individual against themselves, as well as the crowd. And what this really allows us to do is get the highest fidelity signals of how that applicant is interacting within session and be able to provide the most robust score and signals to our customers about what is the risk profile, how familiar are they with that, and reduce the amount of biases that might exist within that data collection. So very good question, and we're always looking to enhance our capabilities on that front as well.
Got it. And the follow-up question for you, James, what's the typical timeline to implement and leverage behavioral analytics?
Yeah, another good question as well. And as we mentioned in at the top of the call, you get all the value from a single JavaScript to start getting value from both VGS as well as NeuroID. And so as soon as that JavaScript is live, we can start providing value through our crowd monitoring and alerting capabilities. Again, it's a very lightweight product that allows people to get off their feet very quickly with behavior. And so typically we can be up and running in a matter of 1 to 2 weeks where customers are getting direct value from that behavior. And that can include identifying what normal baselines are across your portfolio for familiarity and unfamiliarity, as well as that distribution changes, where should you be concerned? For example, we had one of our customers who saw a huge TikTok campaign where they had a bunch of applications unexpectedly come through their flow. And they were very worried initially because they were not expecting that influx in volume, and they were getting a lot of declines, but their fraud signals were not going off. And so we were able to highlight that genuine population, that it was expected volume increase, and it was the majority of it was genuine to where it would be expected. That can be available as soon as the JavaScript goes live. In regard to the other two components where it's a real-time decisioning, all of those same underlying behaviors feed into our real-time signals as well. And we'll work very closely with our customers to understand where they can plug us into their onboarding journey and where they can begin getting the most value as quickly as possible through our variety of behavioral signals and attributes. And that typically will depend on from customer to customer.
Yeah, makes sense. But that TikTok use case was really cool.
Yeah, what's really cool, a few of the quotes that we've heard from some of our customers is, once you see the data, you can't unsee it. And when you get to visually look at the distribution of applicants based on their behavior at a crowd level, it's very compelling and opens a new door to understand where and when things are happening around behavior, and how you can, from our crowd alert product, even start actioning on that data without needing real-time decisioning. So it's a really cool place to start, and a lot of our customers really appreciate those levels of insight.
Nice. We have a similar one. You can't hack what isn't there, again, around data, so kind of similar.
Yeah, that's exactly it.
One more question. Would this whole model work for fintechs, neobanks that rely on sponsor banks for issuing? Ilan, will you be able to take this one?
Absolutely. We have several clients who are fintechs who rely on sponsor banks, And what really helps them is, again, I spoke to speed to market. If they are effectively a program manager working with a sponsor bank, that sponsor bank is going to require them to be PCI compliant and SOC 2 compliant. And with us as the, say, your compliance as a service vendor, we lift all that away from you. We take away the bulk of that pain, right? So now you get the benefit of our security posture. You also get the speed. And in terms of headcount, you probably don't need as much headcount because you're relying on us for a lot of that compliance need. And when you think about expanding, you may have one sponsor bank for one program. You may want a separate sponsor bank for another program. And they're going to talk. They're going to want to understand what your behavior is like. In working with VGS, you're going to, if you cross-reference between sponsor banks, they will know that you are a good actor in the system and understand that you are reliable and that you take compliance seriously. And for those of you who are growing, particularly the fintechs, as you begin to grow, the regulatory scrutiny increases, the regulatory burden increases. You should leverage our platform for that burden as you begin to grow, because you probably don't want to spend a lot of your resources on compliance related issues. You probably want to spend it more on product development, sales, and marketing, and allow us to do what we do best, which is to protect you, allow us to protect your end customer, and then you can innovate without the burden of the compliance that we take on your behalf.
Yeah. James, do you have anything you want to add for this one, or?
Yeah, and you know what's really interesting is the ecosystem within financial services is growing. The complexity of it is growing day by day. And as you start thinking about traditional banks and charter banks working with fintechs and the neobanks coming on, we also see and do work with customers around that as well, to where you know, in a lot of cases, the charter banks are the ones who are looking at that risk profile, as Elon had referenced. And what we can help do, and what we are doing for a lot of those fintech leaders that we're working with, is helping them ensure that they have a risk right experience based on the behavioral data, and ensuring that their charter banks are more comfortable with how they can start acquiring customers. And again, when we think about the fintech specific focus, it is a lot more on that customer experience. And when we think about some of the trends that are happening today around identity, it's important to start trying to build as holistic of an understanding of who's coming through your application as possible. And so that's where we're really helping to keep the focus on experience, but really ensure that it's a risk right experience through additional verification and step up for neobanks, fintechs, and some of those financial institutions.
Absolutely. I think I'm just going to continue on what James said. I think we think about our solutions together. You work with NeuroID, you're ensuring that you're getting the right customer in the front door to begin with, right? They're doing their best. They're a high level performer, ensuring that you screened out the bad actors and letting in only the good customers. And then once you have them in your system, we protect the good customers, we protect their data, and provide you that compliance layer as you go through compliance reviews, and as you actually need the real security. It's something that you will need. And Maria alluded to it. We have a zero data approach here at VGS. And what we mean by zero data is there is zero valuable data in your network. So they can't hack what's not there, as Maria had mentioned. So zero data is what we believe in. It's our mission, is to, maybe, how can I say this, protect you from yourself, right? And make sure you don't put yourself in trouble. Again, if you're a startup or you're a smaller institution, you don't have typically have the resources to protect yourself like, say, a top tier bank that has tons of compliance officers and CISOs for every line of business.
So no more questions as of now, guys. I guess that's a good segue to finalize this webinar. And I would like to thank NeuroID, James, thank you very much for cooperation. We really appreciate you as a partner, and thank you, Elon, for this amazing webinar. Over here, you can see the QR codes where you can request a demo from both solutions, and you probably understood already that we're complementary. So you use one, you get like benefits from another one. So please do so, or contact our sales teams. As I mentioned in the beginning of the webinar, you'll receive the recording of the webinar, so you can use it how you want. And thank you very much. Hope you have an amazing day.
Thank you.
Bye.